What is the best stock investment of 2026? Let's start with a simple question. Is Nvidia one of the most valuable companies in the world? Depending on the week, Nvidia trades places with Apple and Microsoft at the very top of the global market capitalization. The ranking moves around, but the important point doesn't change. Nvidia is firmly in the top tier of the most valuable companies in the world. So here's the real question. If a company is already that big, why might it still be one of the best stocks to buy? To answer that, we need to tell a story and then we need to talk about valuation the right way. Quick fun fact before we go deeper, the name Nvidia comes from the letters NV, originally meaning next version. Instead of calling the company NV, the founders translated that idea into Latin. The Latin word for Nvidia means envy or intense desire. Drop the first letter and you get Nvidia. Oddly, Nvidia's power and influence is the envy of many in the world. From the very beginning, this company was literally named after the idea of the next version of computing. Nvidia started as a video game graphics company, but what they figured out early on was that the same chips that make video games look realistic are also perfect for massively parallel computation, which is exactly what artificial intelligence needs. Today, Nvidia chips power AI systems, self-driving car development, computer-assisted design, medical imaging, scientific research, movie rendering and video editing, and so much more. And massive data centers all over the world are also included in that. Most of the fastest growing industries on Earth depend on Nvidia hardware. But Nvidia doesn't stand alone. Nvidia designs chips, but it does not manufacture them, and that job belongs to two other companies with near monopolies. The first is TSMC, which stands for Taiwan Semiconductor Manufacturing Company. Taiwan Semiconductor Manufacturing Company is the only company in the world that can reliably manufacture Nvidia's most advanced chips at scale, with high yield and consistent quality, and there is no quick replacement for that capability. The second is a Dutch company called ASML, which originally stood for Advanced Semiconductor Materials Lithography, even though today it's simply known as ASML. ASML builds the most complex machines humans have ever created. Each one costs around $150 million, and without these machines, advanced chips simply cannot be made. TSMC uses them, Intel uses them, Samsung uses them, and no ASML machines means no cutting-edge AI chips. Now here's the part most people miss. Even though TSMC is Taiwanese and ASML is Dutch, both depend heavily on US technology. Because of that, the United States has veto power over where ASML machines can go. And the US can restrict servicing and upgrades, and China cannot simply buy its way out of this ecosystem. So while it looks like all the power is overseas, the US quietly sits at the center of the entire system, and that matters for Nvidia investors. What about China and Taiwan? This is a real concern, but the risk is lower than it used to be because TSMC has already built major manufacturing facilities in Arizona, which reduces single point of failure risk. Here's advanced manufacturing inside the United States and changes the geopolitical calculus. At the same time, ASML cannot legally support China's most advanced manufacturing due to export controls. That doesn't eliminate risk, but it reshapes it. The real long-term threat to US dominance in AI isn't Taiwan, it's China recreating the entire stack themselves, including manufacturing, chip design, and AI accelerators. That is possible, but this ecosystem took about 30 years to build, and even optimistic timelines push real parity into the 2030s. So that's not a 2026 story. Now, let's talk about valuation, and this is critical. I'm talking about the NASDAQ 100's price to earnings ratio. A PE ratio answers one simple question. How much are the investors willing to pay for $1 of earnings? Higher PE means higher optimism and bigger expectations. Lower PE means expectations have cooled and long-term entry points improve. Nvidia does not trade in isolation. When the NASDAQ 100 becomes expensive, even great companies pull back, valuations compress, and expectations reset. As I'm producing this video, the NASDAQ 100 PE ratio is roughly 34 to 35. That's well above average. In my opinion, when that ratio drops to around 30 or below, there will be excellent long-term buying opportunities. Very simply, my entry for putting money into Nvidia stock is when the NASDAQ 100 PE ratio drops below 30. Not because Nvidia is weak, but because valuation cycles matter. That's the trigger. So you can web search the PE ratio of the NASDAQ 100, and when it drops below 30, that would be my entry, period. This long-term investing discussion is not the system we use. We're 20-minute traders, and our focus is fast in and out trades that do not depend on market direction at all. This is why in 2022, when the market crashed, 20-minute trader went viral as a go-to for non-traders to get into trading, because the patterns worked just as well that year as the year before when the market was on a tear upwards. But based on surveys we've conducted, people who genuinely try the 20-minute trader system succeed. Not everyone, but the majority. And here's the cool part. The market could be crashing in a death slide, and our prediction system should still work just as well. Because it's not dependent on any way on the market going up or down or in any direction. The patterns are still there. If you want to learn more, we run free webinars, we offer free classes, and there's a link in the description. Nvidia may already be one of the most valuable companies in the world, but that doesn't disqualify it from being a great investment. Timing matters, valuation matters, structure matters, and I believe 2026 is where those forces line up. If this helped, like the video, subscribe to the channel, and I'll keep breaking down the stories behind the hype. I'll see you in the next video.